Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. I'm wearing some little samba colory clothing today. It's half a day, Christmas Eve, so already early Merry Christmas to all of you that are celebrating. It's half a day. Market will be closed at 1 p.m. Eastern time today, so we don't have that much time to make or lose money as of today. And of course, tomorrow the markets are closed. So at least we'll have a day to chill, and then it's already Friday. So maybe we'll skip Friday and make this an extended long weekend. Now, in this live stream, we do have a couple of items to touch on for the Nike lovers. There is some news. Tim Cook did buy around 50,000 shares or so. It's around $3 million. We'll go over that. Got some Intel news, and of course, I'll again explain a bit my thought process behind the whole selling my PayPal options to buy some others. I still didn't sell anything. Probably will do it after the stream, and then we'll go over the usual stuff. Some TV people talking about something very interesting about AI and replacing jobs. So we're going to talk about all of that in this video. As always, let's start off with some prediction markets. A little bit lower than yesterday. The government shutdown probability sits at 28% at the moment. And then probabilities of a rate cut in January keeps on dropping more and more. Now it sits at 13.3%. So are we surprised? Not really. Let's look at the March one. Even the March one has dropped to only 41.4%, and it's 53.5% that probability that we are going to stay even in March at the same level that we're at right now. Selling my currently money losing PayPal options to buy at a lower strike price. I did a whole community post on here and on the portfolio for those that really want to read through all of it. It's up there. Then we've had this thing come out yesterday evening. And yes, we also have some AST news, not to the moon, but to orbit. So Timothy Cook, which is Team Apple, Tim Cook, did buy 50,000 shares of Nike. Now, Tim Cook is a board member of Nike, but it's always a good sign to see board members or insiders buy shares. There is this one guy right here that says, you realize he has $2.6 billion. This is meaningless. Well, $3 million is still $3 million. This is like a very dumb argument that I hear a lot of people say, oh, he only bought $1 million worth of share. He's worth a couple of billions. It's still $1 million. If you think it's meaningless, try and call Tim Cook and ask him for $100,000, not even $1 million. Chances are he's not going to give you even $1. And then we have this dude right here, Jonathan Marcus. I don't know if he's taking a little jab at me. Legit couch change for this man. Excuse-moi? How dare he? So let me actually write this. Excuse me. Voila. What the heck does this guy think he is? Legit couch change. Think I'm worth a couple of pennies? These people. Unbelievable. Unbelievable. Then, on a more serious note, we did have, of course, some news for AST Space Mobile folks. So they successfully launched Bluebird 6 with the largest low Earth orbit comms that flew from India. So of course, huge congrats to them. It's the largest satellite, communication satellite in low Earth orbit as of right now. Did the stock move a lot? Probably it moved a little bit. Let's have a look, shall we? Pre-market. Yesterday was actually turned out to be an okay day, especially for big tech companies. So AST is up, it's at $88 actually. Is up 3.4%. We also have Zeta that's up 5.2%. We'll have a look at that. But yeah, AST is up 3.4% on that successful launch from, I think, yeah, for me, late last night that happened. We also have a Snowflake that is acquiring another company. So acquisitions are still going on. So Snowflake are in advanced talks to buy Observe for about $1 billion, according to Guru Focus. This would be Snow's biggest deal and a push into AI-driven observability app plus infra monitoring. Okay, it's $1 billion. Snow on the news is probably down a little. Yeah, it's down $1. As always, the company that does the acquiring is usually coming down, and the stock that is being acquired, well, this one is not a publicly traded company, but usually the value of that stock does go up. As for the rest, we did have the Intel news. So Intel at the time of streaming this is down 3.3%. Probably on this report right here. Sources told Reuters that NVIDIA tested Intel's 18A process but has since paused and isn't moving forward right now. The same report says a Commerce official said US gave Intel a shot, but the chip maker isn't too strategic to fail. And on that news, Intel is now down 3.3%. Now, the partnership with NVIDIA still exists and they're still going to launch products. I think it starts already next year. I think the story is more for 14A for Intel when it comes to the NVIDIAs, the Apples out there, less on 18A as of right now. So Intel, as you can see, and this has been, I mean, my thoughts since I sold my options. I think we have time now. I think Intel is in a stage where it will stay around $35 or so. It can go a bit higher, a bit lower as well. But I do think we're going to stay around that area for a while until the business, especially foundry, starts to pick up as well. Am I going to take some profits on Palantir in my portfolio this year? Yeah, I'm going to take the profits from that one share in the portfolio. No, it's going to be that one share, that tracker share in the portfolio. It's going to stay there. We'll see how much profit one share can generate us over the next couple of years. We did have some micro data. I didn't know we did get those today. So initial jobless claims, 214,000, estimated number 224,000, and the previous one was also 224,000. So let me maybe actually put this in the chat so we can pull it up and then continue on our way here in case people did miss it. So okay, again, not too bad, although is this also one of those figures that gets revised a couple of times, or is this one of those figures that once we get the number, it stays like this? Because we know that with a lot of other figures out there, it's usually we get a number, then a month, 2 months later, it's suddenly a worse number or a much better number. So PayPal. PayPal. No, okay. So for those that are unaware, I'm not trying to go out of my PayPal position. I'm just trying to rebalance the risk reward, which is what I said yesterday. So I wrote this whole post in case you were all wondering the reasoning behind this. Today, no, I'm still waiting for Jose to join because he said yesterday that he would join. He would join today as well. But we are taking the day off tomorrow, like everyone. So the portfolio update that I shared yesterday is basically all of this. If you are following the portfolio, it's basically this. I still have, as of right now as well, the March 26th, June 26th, January 27th, $100, $90, $120 for 2027. And I want to change those, take the loss, of course. And again, there's the whole reasoning here. And I also wrote it on the channel's community post if you want to read that. So the move is this, is take the cash that's left and buy 80% 2027 strikes at $70 and 20% probably also June 2026, $70 one. Because in this now, unfortunately, because the movement sucked, it's not that I don't believe that PayPal should be at $100 or could be at $100. It's just that if it goes to $100, great, I'll be making money with those ones. But if it doesn't, at least I won't be losing money. Because if it doesn't, then all the ones that I do have right now are, of course, going to expire worthless. Now that I am lowering the strike price, I am, of course, lowering my risk. Maybe, yes, lowering the reward as well, but I will still be rewarded if we reach 100 with what I will be buying next, but at least the risk reward makes a lot more sense. With this one, you might say, oh, but why didn't you do this earlier? Well, a month and a half ago, PayPal was higher and well, the market took a bad turn, plus management didn't really help with their whole pessimism and focus on the weaker consumer sentiment and completely disregarding every other positive thing that is happening at PayPal right now. It is what it is. This is the options game. Sometimes it works, sometimes it doesn't. In this case, it worked for a week or a day or so, and then it did not. With the Intel one, luck was on my side, and that worked out very well. For now, the PayPal one did not work out, and so, okay, we live and we learn. In this case, I learn by paying the price of having options that are down quite heavily. In 2026, someone asked me this yesterday. What are the catalysts? Well, with PayPal, catalysts is a big word, but what would make this stock move up a little bit? Well, we start the year with CES earlier in the year, I think the first week. I almost went, didn't work out. Tried to do something with NVIDIA that didn't work out, so we'll see what we can do later. But CES, there is, of course, PayPal will present their new ads platform product. So if it's very good and maybe they do give us some use cases, could move the stock. Then, of course, a month later, we have the earnings report, earnings call, and the upcoming analyst conferences. Hopefully, they'll say that consumer spending has improved a little bit. And if not, then I guess we'll still be at around $60, $70 by then. Then what do we have? We have bigger tax returns. We have the big, beautiful bill that starts to help in certain areas in the economy that could help, again, consumer spending. So in a sense, could help PayPal. And then in May, you have the Q1 earnings report and earnings call and the upcoming conferences. And then in June, I'll have the first option, the 20% left of the $70 option that will expire. And then, of course, we still have the back half of the year for it to go well above $70. I think it needs to be well above, at $80 for it to be very profitable. Of course, the higher it goes, the better. What am I pumping today? I'm pumping the Brazil jersey. I think it's a very nice one, to be honest. It's with Thiago Silva on the back. Had to customize it because, of course, he's not playing anymore for Brazil. So I had to do a custom Thiago Silva jersey. Love the guy. Wish him all the best at Porto. So, where are we at today, you might ask? Well, yesterday, we closed out the day quite okay, especially because the big tech companies helped out a lot. The neo clouds, all of these smaller AI players were down, but the big tech players pulled their weight for yesterday. Right now, pre-market, we look a bit like this, so it's a bit flat across the board. Again, going back to this argument, again, if this argument were to be true, we would see them buy back quite a lot more shares. But it is not happening right now. Maybe they will surprise us next earnings report and suddenly they'll say, we actually bought back more shares than in other quarters. Okay, great. That would be actually a great scenario. But so far, no indication of an accelerated buyback by the company. Now, we do have, again, some more people talk about the Santa rally and tech going up, etc., etc. So let's again have a listen to what they have to say. And then there is one specific person that said something quite interesting again regarding AI and job loss. So let's start with number one.
We're looking at the VIX right now. It's at its 2025 low. You also gave us your Santa Claus rally picks. One of them is Bitcoin. Now, generally when the VIX is that low, we hear a lot of talk about a risk-on rally. Do you see Bitcoin rallying over these next 7 days?
I think it could be, Frank, because, it tends to be a year where if you're getting liquidity coming back in the market, especially if the Fed injects some liquidity, and that seems to be happening, then the year end for Bitcoin can be pretty strong. And it is the asset class that's really underperformed, right? Especially to gold, as we're seeing new record highs on gold this morning. So I think it has some scope for here to rally into year end.
By the way, you have a wide range of picks, Ben. You got tech and consumer discretionary, Bitcoin, and also Home Depot in particular. I want to go back to that tech trade. We were highlighting the strength in NVIDIA. Yesterday, it was the best stock on the Dow, the S&P, and the NASDAQ on those reports that they'll be able to ship those H200 chips to China coming up next year, possibly in February. When you're looking at some of the skepticism about tech and people trying to pick winners as opposed to just the broader basket, what are you the most bullish about in the tech space? Is it software? Is it chips? Is it the infrastructure players?
I think it's particularly the chips, because as you can tell from the story in NVIDIA, that the moment that chip story becomes more bullish, in this case, they can ship those chips out to China. Those stocks are going up a lot because NVIDIA in particular has the dominance over chips. You can think of Micron, AMD as in that same category. So I think that's the play from here, because that's still really what drives, I think, most of the AI trade as against the infrastructure piece, which seems to be very wobbly because of the debt financing. So I stay bullish on the chip story.
All right. You mentioned the Fed earlier. I know that's really your wheelhouse. Yesterday, we got the GDP report, way better than expected. I mean, so much better than expected. Still backwards looking, still delayed, but a lot better than expected. At the same time, we got that core PCE number. We highlighted earlier, 2.9%. Does that change the path of the Fed in your mind? Does that change the market's confidence that we're going to get those cuts? There's always this debate. Does the market need a cut or not? But it seems like the market really wants a cut, because we saw early trading kind of be wobbly after the GDP report. And I guess then people decided, it's okay, and the markets move higher.
Yeah, it definitely makes it challenging for the Fed to hike, let's say, quicker, faster, because at 2.9%, even though there's somewhat lagged data, but in the end of the day, it's what the inflation currently is. And I think this is what makes this Fed at least cautious to move quicker with rate cuts. And I think this is where the challenge will be in the first half of next year. There's a lot of expectation, especially from the administration, that the new chair comes in and starts lowering faster. And if the economy keeps growing fast, as we've seen yesterday, and it could well be the case because we're in what it seems a productivity boom, and inflation doesn't really change much, then the Fed can maybe cut one time. That's where the market currently is. But as you say, there's more expectation about it. So I think this Fed will be cautious in the first few months. And that may keep a little bit of trepidation in the markets, but I think overall the Fed will deliver on several rate cuts next year.
Where do you think?
Okay, so first of all, just because you're late doesn't mean I didn't cover this already. I covered this a couple of minutes ago. Next time, just ask nicely and I would have repeated myself. But now, sucks to be you. Anyways, going back to the couple of questions here in the meantime, if we go and look at the April probability of rate cuts, because this guy, I mean, I think he's quite correct in saying that we're starting the year where the Fed will be like, you know what, let's have a look at inflation. If it seems to be under control, we might not touch rates. But of course, if the labor market is still very weak, then maybe they could cut here and there. This is the probabilities for a rate cut in April. Still quite balanced here. Staying the same still in April, or maybe 25 basis points cut at the moment. So it seems like, yeah, we can go the next couple of months without any moves from the Fed. The local, the stock has been flat over the last couple of months. That's okay. As long as the business does well, I am quite happy. Then there was someone that asked a question in a respectable way. I am only looking at the options for PayPal. My shares, I don't touch them. So Techno, I'm only looking to replace the options that I already have, but I'm still keeping my shares. Then, moving on to the other guy that said something again quite interesting. So he said, AI isn't taking jobs. People are choosing to replace humans with AI. I found this statement quite interesting, because to me, this statement means that something's happening.
I want to talk to you a little bit about AI first. You're really focused on AI when it comes to entertainment, specifically the music business. You say when it comes to AI, the real question is, will it be ethical, efficient, and will it undercut short-term or long-term innovation? Before we get dig into the music part of it, I want to talk broadly. What do you mean by that? I mean, isn't AI the innovation itself?
Yeah, I think that's really the essential question that people need to ask themselves. I think we also need to examine our language on this subject. People often talk about how AI is taking away jobs, and that's not really what's happening. What's really happening is that companies, managers, owners are making a decision to have AI take away jobs. AI isn't making decisions. It's actually the owners of the companies that are making the decisions. And once we think about things from that point of view, then things begin to make more sense.
Wait a second. Did he just provide the best argument out there against this whole AI is going to destroy jobs? Smart guy here. Yeah, I was about to use the argument that Marco just wrote. Don't wanna put it on the screen because maybe YouTube will flag it. But yeah, then but I would post this thing. AI isn't taking the decision to take your jobs. Is the management that decided that AI would take your job. But yeah, at the end of the day, the job has been replaced by AI, and so yeah, I don't know. When I saw that title, I was like, I didn't even listen to his argument before I went live, because I wanted to have a real reaction here, and like he went on and I says, okay, where is he going with this? And I'm like, he went that way. He went the way of yeah. That's that doesn't make much sense. Of course, AI is not the guy, is not the system that tells you, oh, John, thank you for working with us for 10 years, but here I am taking your job. Obviously, it's going to be Karen from HR that comes in and tells you, you know what, we are having a new layoff round, and unfortunately, you're part of the bunch. It's not AI that does it, it's Karen from HR. Yeah, but at the end of the day, you lost your job, and probably, yeah, AI replaced you, or AI is helping another employee replace you. So it's literally, it's a bit of the same, but I think we should start using this argument. AI is not costing jobs, it is the management that costs jobs. Huh. Brilliant. Brilliant stuff. Let's see what the market is doing right now. This guy gave me a good laugh right now. Congratulations, my dude. Quickly touching on a question here, someone asked about Rubrik and Shift 4 a bit before. So first up, my plan for Duolingo and Shift 4 have been adding more, as you know, in recent weeks. And Duolingo, I am willing to wait and see if their strategy plays out in 2026. As for Rubrik, same thing as Shift 4. I have been buying a little bit more before, and I'm quite happy. We've seen the earnings report. It was a very good report. Stock went up and then stock went back down. Stupid reaction, but okay. As long as the company does well, I don't mind. So those are right now. Last week I made a couple of small moves, but right now I think the only move is going to be the replacement of AI. That's about it. Then some more positive news, which hopefully some better arguments from the following person.
Joining us now to talk technicals, Katie Stockton, Fairlead Strategies founder and a CNBC contributor. I think, Katie, you were looking for some tough advances, but not as even and easy as we had following the April sell-off. But the market has continued to grind higher.
Yeah, I wouldn't call it a grind higher, but it certainly is very close to new highs. Since October, mid-October, we've seen a loss of momentum, and you feel it, right? You feel the ups and downs. It's more volatile. It does feel like it's taken on a different character than it had in the earlier stages off the April low. That's not necessarily bearish, but what we have seen is a loss of intermediate term momentum that puts us on watch for a deeper corrective phase. We're always believers in breakouts. So if we do see the S&P breakout to new highs, that would mean for us a couple of good solid closes above final resistance, that's 69.11. That would be a short-term positive catalyst, but otherwise we're going to assume that we're still in this kind of corrective mode and wait for a better entry point, and that can be triggered by things like oversold upturns. So there are positive catalysts that we would certainly adhere to if we see them, just noting that, of course, the uptrend is still very much alive and well.
Why doesn't a new high count as a breakout? We've already gotten that. What do you mean if we get a breakout?
Yeah, so it's really important to see confirmation. We found that new highs, just incremental new highs, or if you hit it intraday, if you're not holding up there, it can very easily be a whipsaw, especially right now. Of course, the market has low volume, especially in environments that emotions are running high. I don't know if I would argue that this is one of them, but you just want to make sure that it holds for, if it's a short-term breakout, a couple of days to prevent any kind of whipsaws to the upside. And the same would go for the downside. So it's more of a confirmation that we're looking for versus just an incremental new high.
So a couple of things here. One, it's true that right now we are in a tricky situation with the market, right? Yes, we can creep up higher and higher and reach record highs. But to really continue the momentum, we would need to see the market be, for a couple of days, maybe even a week or so, green, to really solidify the fact that we are still going in an uptrend. Right now, it's like 2 days of extreme green, then a little pullback, and then sometimes we've had 2-3 days of extreme red, and then suddenly a flat day, and then we go back up. So it's really like up and down for the last, what is it, month and a half, I think, across the board. First, it was the AI smaller companies that took a huge hit. Of course, they were all up 200, 300, 500% or so. Then suddenly, poof, down 50, 60% in a month. Then we had the big tech companies also pull back a little bit. And then suddenly you had the big tech companies not moving, while a lot of the other companies that have been lagging, suddenly they started to move before. Very, very strange environment right now in the market. Okay, it's the end of the year, a little bit less volume here and there. People may be repositioning. Tax loss harvesting has been happening for a month or so. So, okay. But 2026 is, again, I think, start of the year, I don't expect much. First earnings season, most of these companies are going to tell us what they expect for 2026. So yes, do expect some moves, especially end of January and then the whole of February. I think that's going to be very, very interesting. Then as for Rob's comment here, right now without agents proliferating yet, AI is like knowing Excel when Excel came out. People who know how to use it will take the jobs of those who don't. Yes, but I think the argument that people are making right now is that Excel, you're saying without agents, but yeah, but even without agents today, because it's not like if both of us worked somewhere, you use Excel, I use but don't know how to use Excel that well, I would still probably keep my job. Today, if you know how to be way more efficient with AI, it's very, very likely that someone else inside your company is going to be kicked out of the company because, well, one person can suddenly do the job of 2, 3, maybe 4. That's possible. I think, yeah, once, maybe a year from now, we are going to see maybe a bit more of this effect. But I do also think that now you have a lot of layoffs across the board. I think over the next 12 months, you'll have also a lot of companies try to rehire some of the lost positions because they'll notice that, okay, maybe AI is not as good as expected for certain jobs that we now need again. This is something that happened before. I expect it to maybe happen again already in 2026 is you cut more than what you thought and then you start to rehire and balance things out. I'm not certain this will happen, just one of my thoughts right now. Someone here asked the usual questions. Well, if PayPal becomes private, it becomes private at a certain price. So we might not moon because, I mean, if the stock stays at the same price, the stock stays at the same price. If someone wants to take PayPal private, it will probably take it private at a higher price, but I highly doubt they'll take it private at $100 when the stock is at $60 right now. No, I'm pretty sure that's how they think right now. They can do more today, but I also think that a lot of companies have laid off more than maybe what they should have, and then they just rehire again. I mean, Elon's company are the prime example of it. It's cut a lot and then hire back until you're satisfied. Instead of cutting a little, and then you have to cut again and again and again. You cut once a lot, and then you start hiring where you really need more people at your company. But yeah, if you take the Meta example from 2022 is we are going to do more with less. And then yes, they became way more efficient. Although if you look at the amount of money they've spent on hiring new AI engineers and buying AI people, it's the same as if they would hire probably 1,000 of the normal employees at the company. But yeah, we'll see. We'll see what happens. Off topic, real quick. I think 2026 is going to be the year where we return to the cinemas. We have Avengers Doomsday. I don't know, some basement dwellers on Twitter were all out yesterday. Oh, who's going to watch this movie? It sucks. Steve Rogers is supposed to be old, not young, blah, blah, blah. Stop it already. Be happy that we finally are going to have a year where we can go to the cinemas and actually watch some entertaining movies, hopefully. So Avengers Doomsday is coming out next year. Dune 3 is coming out the same day as Avengers Doomsday. You have a new Spider-Man movie. You have The Odyssey that also looks quite good. I'm very happy as someone that likes movie. I'm very happy that suddenly we have something to watch of, I would say, quality next year. We do, we did also have a very interesting, let me actually try and pull it up, thing that came out yesterday. There is, for some reason, they always have to reboot something that was already great before. So The Legend of Aang, The Last Airbender movie will no longer be released in theaters next year. Do you know where it will be released? On Paramount Plus, exclusively on Paramount Plus. Remember the argument that they said, oh, Netflix buying Warner Brothers is very bad because they are going to cancel all the theatrical releases. Funny how the tables have turned here. Plus, I don't think anyone asked for a new Avatar. The OG one was good enough. But going back to the other story, I do think that next year, first of all, I think Disney could also be a value play for next year, especially with this whole streaming wars again going on. And yeah, we're going to see a lot of positive moves, I think, for the entertainment business. So Avatar, I am going to watch Avatar. Still a good one if you keep your expectations low. My expectations are very low with Avatar. I am purely going because it seems like a beautiful movie, but the story is probably still the same. Blue alien people, unobtained resources, bad people come, they see or they clash with a new clan, great visuals, now with more fire, a little bit of water, the end. 3 hours of that. So I am happy to go watch it, but yeah, my expectations are not like, oh, this is a Christopher Nolan type of movie. Zeta apparently is up on no news. I tried to find something when we were listening to the CNBC people. Have not found anything, so it's up 3.7% on no news at the moment. Okay. AST is of course up because of that successful launch. Novo is up another 1.9%. Rocket Lab is up because AST is up. And then as for the rest, who's down the most? Intel, as we said before, because of the NVIDIA 18A report. And well, I'm not that surprised, to be honest, because I think, again, it's more about 14A than 18A. I just spoiled it for everybody. Well, it's the third Avatar movie, so if you didn't catch the plot after Avatar 1 and 2, then I am sorry. Today, OpenAI mulling placing ads inside ChatGPT according to the misinformation. Yesterday, Sam said, I don't think placing ads in chat is the right approach in the future. You don't say. You don't say. So how are they going to make money other than subscription and the possible hardware? I don't know. I don't know. And ads are probably going to come anyways, I think. I did add, I think the last time it touched 80 or so. I don't know where it's at right now. Where is Uber? Probably also 80. Yeah, 81. I'm patient with this one. I think it's a value growth play. What else is down today? Pagaya is down 0.7. Yesterday it was down also 3.1. BMNR is down a little bit today. Meta is down 0.2. Nvidia is down 0.2 as well. D local is still here around the same levels. Hood is down 0.1. Iron is down. So NeoClouds pre-market, only Iron and Hut 8 are down. The rest are a little bit green. As for fintech, I think it's a 50-50, no, worse than 50-50. But nothing is really down that much because it's going to be a quiet day, low volume day right now. Chips are also fine. Let's see, Rubrik is up 0.3, still here just under the 200-day. Where is Melly? I did add Grab now, so Grab is still $5.1 per share, and then Melly is probably still around 2,000. Nu is still under 17, but has been making its way back up, and then Melly is $1,995 dollars. I hope the Odyssey is not as bad as Napoleon. I didn't even watch Napoleon, but the Odyssey is a Christopher Nolan movie, so expectations are already sky high. I'm betting on Amazon for the next 2 years. I don't think you can go wrong with that. I mean, the fact that the stock went back, okay, the market pulled back, but the fact that the stock went all the way back to 216 after that great earnings report, we did recover, of course. We are now back to, the day before the last earnings report. It's still ridiculous to me. Yes, it is a huge company already, but big can become bigger, as we've seen with Google, with Apple, and with, of course, Microsoft and Nvidia as well. So I agree with you. How are ads profitable? Because I think right now you get also more targeted ads. I think we are all we're all always surprised at how many people buy things because they are getting targeted by ads on YouTube, on Instagram, on TikTok, and all of that. And especially now, yes, even with AI, you can target it much better. You can integrate it much better. I think the ads, sometimes when I look at some reels, it takes me a while to understand that it is an ad promoted reel and not just a regular stuff. So they're doing a very good job to make ads feel like real content, which is why it works much better. YouTube serves ads in the middle of live streams, and in the middle of the videos as well. If that was not the case, I don't think I would be on YouTube. I don't think anyone would be on YouTube, to be honest, because we're not spending hours on here for free. There was a question here. Yeah, where is Jose? I think he's probably sleeping in. We'll leave him be. Nebius is extremely high beta, hoping for a larger pullback. Well, it's not like we didn't go all the way to $75, right? I think the pullback has been quite aggressive. If you look, not even looking at October, I'm looking at November. Stock went down 45%. So the pullback has been there, but it's always, again, I'm not specifically saying this to you, but it's always the same where a stock already drops 40-50%, and then people say, oh, I wait for an even bigger pullback. Let's be honest, you're not going to buy it, right? Because now it did rebound. What was it? 20%. So now you want another pullback? It was already lower before. It's always the same, which is why I say, if you like a company at a certain price, stop making excuses with, oh, I want more pullbacks or whatnot. If you like it at a certain price, just buy it already. Buy a small amount. So if it does go a bit lower, you can buy more. And if it goes higher, at least you already have a position in that company. Have I considered using other streaming platforms? Yes, but I don't have a presence on other streaming platforms. So there's no point in me starting to go and stream elsewhere. Not at all. Live streams are not profitable at all for me. But I do it because it's fun. We get to interact with each other. But no, if I had to choose, I would definitely stop live streaming. Again, it can definitely become more profitable if I can scale the live streams, right? If you can reach, I mean, Amit's streams are extremely profitable. even if he doesn't run ads, I mean, the amount of super chats that he gets is like a month's salary sometimes. So it can become profitable, but videos are way profitable because again, videos, they stay on the platform. They aren't an hour and a half long or 2 hours. And so more and more people can watch it no matter where they are. They don't have to be joining the video the moment or the live stream, the moment I go live. So no, streams are definitely not profitable. I just do it because it adds a little bit more value, I guess, to the community. No, I added to the watch list. Sorry, I added Grab to the watch list, not to my portfolio, and I won't add it to my portfolio because I get my exposure through Uber. That's about it. But I still view Grab as a good company. I just don't need it in my portfolio. But yeah, I mean, it's also a very bullish case for Google, right? The fact that they own YouTube, and YouTube, in my opinion, is the best platform for creators. It pays the best, you get the best exposure. Say what you want, but X is very bad at discovery and things like that. I am monetized on X. It pays for my X subscription and it pays for some extra coffee, but I tried to upload some videos on X a while ago. Like watch time is 2 seconds. The views are fake. It doesn't make any sense to upload anything on X. It's a good way to gather information, maybe interact with people. That's great. But if you're a creator, YouTube is the way. Maybe if you like to make short form content and your content fits the short form content format, I don't think my content fits it. Then yeah, YouTube Shorts, Instagram Reels, and TikTok, I guess, are your go-to platforms. But if it's long form videos, then it's YouTube only. Like I never thought about, let me try and no, I'm like, it's YouTube. It performs very well for me, which is how we've reached this amount of subscribers, viewership per month. And I'm happy with that. Plus, if I start making content on other platforms, is too time consuming and forget about it. X is unusable at the moment. I don't think it's unusable at the moment. Again, the bot problem has always been there. Always. Now the fact that, yes, you can filter on verified, non-verified people to comment on your posts, I think it's fine. But yeah, for example, I've been unmonetized for a month, and if I didn't check it, I wouldn't have known about it. Okay, like the email went into a spam, but fine, but it's like I appealed, now I get monetized again. The reason why I got demonetized, still unknown, which is also stupid, but this happens on YouTube as well. It's like the bigger the company, the worse the customer support. Like how many times did a content creator get his video removed on YouTube? And it's like, oh, it goes against the terms and services or whatever. And you're like, okay, but give me exactly the reason why you removed it. And they never really give you, which is stupid. So yeah, different platform, different value, I would say. I use X for purely information, maybe conversation, but YouTube is the go-to content creation plus monetization, turning into a, I would say, valuable business for now. All right, we have 10 minutes before the market opens. So let's see if we have some interesting moves. Probably not much today. Let's see if we've got some news that came out in the meantime. No, I closed to buy, well, I am going to close to buy a lower strike price. prices. I don't sell to completely sell. I sell to buy better, to buy, hopefully better, just lower, better balanced risk-reward ones. So no new news that came out. In the meantime, we've seen the jobless claims. But maybe this, no, but maybe not. Okay, this might be an interesting one for the chat. And this time I remember I will close the poll. This is one for the chat.
A viewing debate, Christmas movies or sports. Senior economics reporter Steve Leisman is at the table this morning. The result of the CNBC All-America Economic Survey and what Americans watch on the holidays, sir.
Yeah, we threw this question in with our survey, decided to save it until now, have a little fun. Whether you have a wonderful life and spend Christmas with family or you're home alone, everyone has a favorite Christmas movie, unless, of course, you're a Grinch. We asked 1,000 Americans, tell us your favorite Christmas movie. And the winner is Home Alone, number one, chosen by about 15% of people made that the number one Christmas movie, followed by Elf. And then Grinch, which, by the way, I think Grinch gets 2 entries there, right? Because there's the cartoon Grinch and there's the movie Grinch. I think most people are probably picking the movie Grinch, followed by my personal favorite, It's a Wonderful Life. And then Die Hard, which came out in July. So there's a debate about whether it is a Christmas movie. We'll talk about that in a second.
So, do we agree or disagree with this? I know a lot of you. The funny part with the Die Hard is because, yeah, it came out, of course, 6 months before Christmas, but it has like a Christmassy vibe in the movie. Home Alone, for me, is... I mean, for me, winter movies is Harry Potter, the whole Harry Potter series, like winter movie. But if we're specifically talking about Christmas movies or holiday movies, yeah, I think Home Alone is definitely up there for sure. Die Hard is again, I don't know how, but somehow it went into the top 3 for most of the people. The Jim Carrey Grinch is, in my opinion, also up there. The other 2, I don't think I've watched it. I do see quite a lot of Die Hard in the chat, which I'm not surprised. Falling for Christmas, Lindsay Lohan. I mean, I can watch the movies whenever I want. Who do you think will perform better in the next 5 years, Uber or Netflix? Well, this is a good question. I mean, Netflix is now in this period where is it going to be Netflix or Netflix and Warner Brothers? It's a big difference. And Uber, I think Uber can still perform very well. They could perform even better if, yes, all of these other companies are on time with their robo-taxi fleets that, of course, get listed on Uber. I mean, I would say Uber, again, I'm biased because I own it, but I could see Netflix doing extremely well, especially with the Warner Brother acquisition. But yeah, again, the people that's the thing. With Uber, you have the people that think robotaxis will ruin it. I'm on the other side. I think robotaxis are just going to be commoditized around the world. And it's not going to be one winner takes most. All right, continuing on the debate.
A Christmas Story and A Christmas Vacation are honorable mentions here. Worth pointing out, no movie that got any substantial votes was made more recently than 2003. So we can empirically say the public thinks they don't make them like they used to. We also ask more generally, how do you entertain yourself on Christmas? And here are the results. 66% watch or stream a movie at home. 37% are watching live sports. 29% go to the movies. 23% attend a play, musical, or concert. This is during the holiday season, I suspect. Honorable mentions of going to a sporting event and traveling out of the country.
Okay. Watch or stream movie at home. I'm surprised this is not much higher. I'm surprised this is just 66%. It's probably much higher. It's probably much higher. Watching live sports on TV, 37%. I don't believe that number. I'm definitely watching the Premier League every time on Boxing Day. Although this time it's throughout the whole weekend, so okay. See a movie in a movie theater. Well, I'm going to do it anyways with Avatar. It's just the timing of it. Only 29%. And then 23% attend a play, musical, or concert. I can understand that. So maybe the weather is not great. Okay, so fine. But the 66% there watch, stream movie at home, I don't buy that number. It's definitely much higher. Much higher than that. So something else has to drop here. But yeah, it's... Wait, how do they come up with this? Yeah, this just popped up at the same time I was thinking about it. I'm like, 66 plus 37 plus 29 plus 23 equals 100. Yeah, but I think it was just different types of surveys, I would assume. And so one survey, 66% answered only this, 37% answered the other one. I would assume it is different types of surveys because otherwise, yeah, this doesn't make this doesn't make much sense. Or maybe different types of weeks, because he did say it's throughout the whole holiday season. So, okay, maybe you can do this and that, this and that. I guess, yeah, I guess. So do we agree that the first one should have been much higher or not? No. In the UK, yeah, it's probably watch live sports on TV is like at probably 80% or so, and you can add the get smashed at the pub on top of it to reach 100%. I think that would be the results for sure.
For 8% of the public. The NFL seems to have figured out that people like sports on Christmas. This is the third year in a row that there are 3 NFL games. I think a couple of them are streamed. I think one of them is on regular network. And they tend to rate more highly than the average game, though it might have eaten into the NBA game audience, which used to own the day for sports. We also picked up, by the way, a bit of the K-shaped economy with how people spend their Christmas. When it comes to will you see a movie in a theater, 38% of the financial elite say they will. And by the way, that's people with higher salaries and more money in the market. So those are the gaps between the higher and lower income on the issue of attending a play or a concert, as well as attending a sporting event. More people with money tend to do those things on Christmas Day. So guys, I know what you want to talk about. We could talk about the GDP numbers yesterday and this K-shaped stuff that was in there.
I have one
or
movie.
The die-hard Christmas debate.
I have one movie question for you, which is I am finding, because I have children, that they are less interested in watching movies than they used to be. That they're more interested, unfortunately, in the doom scroll on the phone.
Yes, and are we surprised by this? No, we are not. We are not. It seems like kids can't even stay on the couch for an hour and a half, 2 hours. They need to doom scroll on their phone these days. It's sad because there are some great movies. I mean, it's not just movies. Imagine you want to play like a board game with the family and things like that. Can't even do that because the kids need their ADHD hit like the whoop, need to scroll. And yes, it's true. It's not just kids. It's also adults. And so, ladies and gents, Ding, 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 bing, bing, bong, bing, bong. The markets are open. Rob, you asked for jingle bells, so here it was. Need to find something else for the next time, but we are open. It is December 24th. It's a Wednesday. Markets are open. We have a mixed open at the moment. I think we're 40, 60 or so right now. For 60 red, 40, I mean, maybe less. So it seems like it is a Santa rally and not a Grinch one, as I can't remember who commented on that. Grinch is green, so we need Grinch, and Santa is red, so we need less of that. But yeah, let me close this because we don't need that anymore. And then we'll have a quick look at what's going on with every industry right now. So we have big tech companies. The only ones that are green at the moment are Tesla, Apple, and, well, no, that's about it. I was about to say Amazon, but it doesn't work. I clicked on end the poll. Why is the poll not ending? Let me click on it again. But I don't think many people voted anyways. End the poll. Voila, the poll finally ended. 64% say green, 21 say flat, and 15 say red. That's optimistic. Very optimistic by a lot of you. Okay. All right. Let me actually pull this here. Much better. Okay. Let's go over one by one. Tesla is green. Apple is green. Amazon is teasing us. It's green, red, flat, whatever. Oracle is up 0.5, and then Meta, Microsoft, Google, Netflix, they're all down a little bit right now. Moving on to the chips, we have Intel down 2.2, Nvidia down 0.7, Marvell is flat, ASML down, Broadcom down 0.1, 0.2, TSM flat. Then all the rest are up a tiny bit. So AMD, CLAC, Qualcomm, Applied Materials, Lam Research up a little bit. And Micron continues its way up 1.1%. Moving on to NeoClouds, we have CoreWeave that's back under $80. So that's down. Iron is down a little bit. White Fiber is down. Applied Digital is up after being down yesterday. Well, now it's up, flattish. Cypher is flat, Nebius is up 0.5, Hut 8 almost 1%, and Core Scientific is up 0.6% right now. Could we take a look at Pagaya and Shift 4? We can. We are now here at the FinTech section. So Pagaya is down 1.3%. So it seems like the 200-day moving average is really a zone where it does not hold. Okay, it tried a couple of times, it did not work. It's very cheap. I'm not adding more though. Affirm is down 0.4, Klarna is down 0.4, Hood is down 0.5. Shift 4 is, I'll call it flat. So it's been around the same price for a while. I do still think that Shift 4 will do well next year. It's definitely not expensive, so your risk reward here, I think I'm pretty sure favors the reward. That's why I bought it. Nu is down 0.1, then you have Amex down 0.2, Bull is flat, Block is up 0.1, the local is up 0.2, PayPal is up 0.3, okay. Close the markets, everyone. PayPal is green. Visa is up also 0.2, Adyen is up 0.3, Sezzle 0.3, SoFi 0.3, same with MasterCard, Chime is up 0.6, and Dave is up 0.7. As for the other stocks, here we have BMNR that's down 1.5. Oscar is down 1.7. So is it going to close that gap, or is it going to try and bottom out at around $14.7, $14.5? Remains to be seen. Hood is down 0.4. It's still at around $35. Rubrik is also flat right now. If we can create a little base right here, should be fine. Palantir is down 0.2, so let's call it flat here. Grab is down 0.2 as well, so still at around $5. Uber is at 80. Mercado Libre is up a tiny bit, but not really, so still just under $2,000. Shopify is at 169. Nice. Such a childish thing to say. Rocket Lab 77. They are flat. Adobe is flat for the day, so everyone's flat, it seems. Everyone's flat or down a little bit. On probably very, very low volume day today. So, I'm glad you have a sense of humor about PayPal. Well, it's better to laugh about it than to cry about it. I know I've told you I won't watch your channel anymore. Oh, that sucks. Don't know why, just because of PayPal. I know you don't care. Well, I care. But I do respect you taking a step back on PayPal. I think you will not be watching the channel still because I'm not taking a step back on PayPal. I'm just changing the options strategy. I'm just changing the options strategy, going with a less aggressive strike price. And I'm not selling my shares either, just selling the options to buy other ones. Yes, Nike is up on that Tim Cook news. So he bought $3 million worth of shares. Stock is up 4%. So it still has a way to go, of course, to close the gap from the earnings dump, around 9% or so. That was Nike. What else did I wanna check? VG. Yeah, I've seen this ticker pop up quite a lot recently. Can someone explain to me why? Why VG has popped up quite a lot over the last couple of days? I don't know. It became more and more popular, but I don't know why. As for Nebius, I've seen a comment a while ago in the chat talking about Nebius. What do I think will happen in 2026? I think execution is key here. So expecting, I hope, no delays. And so they could reach their $8 billion exit rate of ARR exit rate of 2026. And the stock should be back above $100. I don't think that's going to be an issue. This is a bit more normal. PayPal being down or flat. Whew, that's better. My opinion on Credo. So I know that Credo did take a hit more recently. Okay, it did recover a little bit. I think it had a very good earnings report, but the stock also ran up quite a lot. So it's more again of a maybe price to perfection, or maybe it's a bit too expensive, but the business is doing extremely well. Maybe it's worth looking at. Maybe it's worth looking at a little bit closer. As for Astera Labs, I did talk. We did touch on it every time I think Jose went on, but yeah, they're also doing well. Maybe it's maybe both of them are stories to revisit, I assume. But I don't really have a real opinion on them at the moment. No, because Tesla is in my retirement portfolio, so I don't really like to touch anything in that portfolio. So plus my Tesla position in there is literally house money. It's a position that started in August 2019, so I've already sold throughout the last couple of years, and whatever is left, I don't need to touch it. I do follow Toast. It is a competitor to Four in the restaurant space. Toast is the #1 player in the United States when it comes to restaurants, and Shift4 is the #2. But Shift4 is also #1 in hospitality, in sports venues, and all of that. I did cover Toast a couple of weeks or maybe already a month ago. It's a very good and well-run company. Very good. As for UiPath, well, it seems like they are taking the right path. Haha. Did you get the joke? Since nobody's laughing here. Thank you very much. I did see that they got into the mid-cap 400, which is probably why they're up 5% right now. I did talk about it. I did talk about it before their last earnings report. And what was the title of the video? It is a maybe sensational title, but the reason behind it was correct. It was a company that still, again, was doing okay, but not better than okay. And for it to start to go up, it had to show the market that they're on the right path. It had to show the market that things are reaccelerating and that the retention rate also starts to bottom out. Now, on the retention rate story, we are still waiting, but based on the comments, it seems like, yes, they do expect things to start to reaccelerate. And so that's why you've seen the stock start to move back up. Is it something I am interested in? Not really. I will always say the same thing, that in the meantime, I still think that this is an acquisition target or a potential acquisition target, I would say. But yeah, I hope they do well. I know a lot of you like it, but it's not really something for me. Yes, Root. So Root is another small insurance player. And this one really, probably just because it's only focused on the car insurance, right? So this one is down 60% from the peak back in March. But then when you look at the Lemonade, which is a bit more diversified, it has done the exact opposite. Which is also why I've always liked Lemonade more than the others, because it exposes you to various industries, not just one. I don't own it anymore though, but it has been doing very, very well. You are one of the best in the bed. Well, thank you very much. I appreciate that. Appreciate that very much. Well, we are all rooting for you, my friend. We are all rooting for you. Whoever that girl is, you are now live on YouTube. This guy joins the live streams quite a lot. So it's probably very smart. Probably very smart. Mbappe here with our daily comment. I hold PayPal and Shift4 and Duolingo. Duolingo or dLocal? I mean, I know the difference between a ticker, but since you're talking about two fintechs, sometimes I just feel like I want to sell my Shift4 and add to PayPal. PayPal is too cheap. Again, you do what you think is best for your portfolio. Stocks don't have feelings. You have feelings towards your stocks, maybe. I have feelings sometimes towards my stocks, but at the end of the day, I couldn't care less. I will buy and I will change whatever is best for my portfolio in order for me to make as much money possible and then hopefully retire or take over the world. No, I don't want to take over the world because that's just too much. But yeah, you do what you think is best for your portfolio. Okay, so it is two fintechs and Duolingo. I thought you were maybe just going 3 fintechs in a row. Do I invest in gold? No, I do not invest in gold. Plus gold is now at all-time highs, and is it going to last so long? I don't know. I don't know. But yeah, right now, markets are, I mean, we could have, again, the Santa rally starts today and lasts until, well, next week. So today it's half a day, low volume. I don't know how many people actually pay attention to the market today. Tomorrow it's closed, and then it's Friday. Who gives a crap on Friday, right? Because it's already a weekend. So let's all get drunk and forget about this week. And then it's next week. It's also a shorter week for, I think, everyone, because it's New Year. So also let's go out, let's get drunk, forget about our troubles. And then the week after that, we're all getting back to reality. And it's like, ugh, 2026. God damn it. How did we get here? Because literally, I think yesterday was the start of 2025. And somehow, and somehow we are at the end of 2025. It's crazy how fast times goes by. Crazy. But yeah. Yes, there is one stock before I leave you guys and go change my PayPal options. Transmedics is there is another video coming out after the stream, and then tomorrow probably nothing, and then maybe probably on Friday once. I think I have to put Transmedics again in a video for like small caps type of play for next year. It's such a disrespected name, and whoever owns it and wants to buy more shares, you're for some reason always getting the opportunity to do it. So yeah. Anyways, that's all I got for you right now. So again, appreciate all of you joining the streams, watching the videos and all of that. But right now, today, tomorrow, maybe the day after that, go spend some time with your family and friends, because it is the best time of the year. The weather might not be great, again, depending on where you are, but yeah, spend a lot of time with your family and friends. The videos will always be on YouTube no matter what. You need to spend more times with the people very, very close to you. So, early Merry Christmas, Joyeux Noël, vrolijk kerst voor iedereen. Appreciate all of you, and we shall see each other, and Feliz Navidad. Voila. You see, Duolingo, that's the bullish case. Appreciate all of you. Have a great rest of your day. Have fun with your family and friends. And now I go chill on the couch. Adios. Thank you very much.